Building wealth sounds simple when it's reduced to a spreadsheet. Earn money, spend less than you make, invest the difference, and give it time. The math isn't usually where people struggle. The difficult part is accepting what that strategy requires from your everyday life. If you want to invest $800 this month, that $800 has to come from somewhere. If you want to spend 2 evenings building a side business, those evenings can't also be spent watching Netflix. And if you want financial independence earlier than most people, you'll probably have to make decisions that look strange to people who aren't pursuing the same goal. That's the part of wealth building that rarely makes it into the highlight reel. You see the successful business, the investment portfolio, or the person retiring at 50. You don't see the years when they deliberately drove an older car despite being able to afford a new one, stayed in a smaller home after getting a raise, or kept investing while friends were spending every increase in income. And this isn't an argument for making yourself miserable. Spending money on things you genuinely value is part of having money in the first place. The problem begins when your financial decisions are being made for an audience. That's sacrifice number one: looking rich. A promotion arrives, and suddenly the perfectly good car feels outdated. Your income rises, so the apartment needs an extra bedroom. A colleague buys an expensive watch, and somehow your wrist starts feeling underdressed. Lifestyle upgrades aren't automatically bad, but financing an image of wealth can prevent you from building the real thing. A $700 monthly car payment, for example, isn't simply $700 leaving your account. It's also $700 that isn't paying down expensive debt, building an emergency fund, or being invested for the future. This creates an important distinction. Looking wealthy is visible. Building wealth usually isn't. Nobody sees the automatic investment leaving your account each month. Nobody compliments you because your emergency fund now covers 6 months of expenses. There isn't much social status attached to increasing your retirement contribution. But those boring, invisible decisions are the ones that strengthen your financial position. So the first sacrifice is straightforward. Stop using money to prove that you have money. And once you stop spending for other people's approval, the next sacrifice becomes much easier because it involves what happens every time your income increases. The second sacrifice catches people off guard because, on the surface, it feels like a reward. It's the temptation to spend every raise. Imagine getting a $10,000 increase in salary. Most people immediately start thinking about what they can finally afford: a better apartment, a newer car, a more expensive vacation. There's nothing wrong with enjoying the results of your hard work. The problem is when your spending grows at exactly the same speed as your income. Financial planners even have a name for this: lifestyle inflation. It's one of the biggest reasons high earners still find themselves living paycheck to paycheck. A simple habit can prevent it. The next time your income increases, decide where the raise will go before it reaches your bank account. Maybe half goes toward improving your lifestyle. The other half automatically increases your monthly investments. You'll still feel the benefit of earning more, but your future benefits too. Many wealthy people didn't become wealthy because they avoided raises. They became wealthy because every raise bought them more assets instead of more liabilities. The third sacrifice is even harder because it involves something you can never earn back: time. Look at how the average evening disappears. You finish work, watch a few videos, scroll through social media, reply to a few messages. Suddenly it's almost bedtime, and somehow 2 or 3 hours have vanished. Everyone deserves time to relax. This isn't about working every waking hour. It's about recognizing that your free time can either be consumed or invested. Learning a skill, building a side business, reading about investing, taking a course that could lead to a better paying job. Those activities don't usually produce results next week, but over 5 or 10 years, they can completely change your earning potential. Warren Buffett once joked that the best investment you can make is in yourself. Unlike a stock, nobody can take that investment away from you. The challenge is that self-improvement rarely feels exciting in the moment. Watching a new series is easier than reading a book on negotiation. Ordering takeout is easier than spending an evening building a freelance business. The easier choice often gives you an immediate reward. The harder choice has the potential to keep rewarding you for decades. Wealth is often built in those ordinary evenings that nobody else ever sees, not because successful people work every minute of the day, but because they consistently dedicate a portion of their time to creating a better version of tomorrow instead of consuming more of today. The next sacrifice has nothing to do with money or time. It's about learning to be comfortable when everyone around you is doing the opposite. The fourth sacrifice is one that almost nobody enjoys: being patient while everyone else appears to be getting rich faster. Every few years, a new trend takes over the internet: cryptocurrencies, artificial intelligence stocks, a new trading strategy that supposedly can't lose. Social media fills with screenshots of people claiming they've doubled their money in weeks. It's enough to make long-term investing feel painfully slow. But here's what those screenshots rarely show: the losses, the failed trades, the investments that quietly disappeared. People naturally share their wins. Very few post the mistakes that came first. Successful investors understand something that's easy to forget in the excitement. Building wealth doesn't require you to catch every opportunity. It requires you to avoid the mistakes that permanently set you back. That's why many experienced investors continue buying diversified index funds year after year, even when a new trend promises faster returns. It's not exciting. In fact, it's often so boring that people assume it can't possibly work. Ironically, boring has a pretty good track record when it comes to investing. The fifth sacrifice is giving up the need to be right all the time. This applies to investing, but it also applies to money in general. Imagine someone buys a stock because they're convinced it's going to soar. A year later, the company's business has weakened, and the original reason for buying no longer exists. Some investors refuse to sell because admitting they made a mistake feels worse than losing money. That's pride making a financial decision. The same thing happens outside the stock market. People stay in expensive memberships they never use because they've already paid for them. They keep an unaffordable car because selling it feels like admitting defeat. Economists call this the sunk cost fallacy. Money you've already spent is gone. The only question that matters is what decision gives you the best outcome from today onward. Wealthy people aren't successful because they never make mistakes. They're successful because they usually correct mistakes quickly instead of defending them. One of Warren Buffett's famous rules is simple. The first rule is don't lose money. The second rule is don't forget the first rule. Of course, every investor experiences losses. The deeper lesson is to avoid turning a small mistake into a life-changing one simply because your ego refuses to let go. That mindset doesn't just protect your portfolio, it protects every financial decision you make. The final two sacrifices are perhaps the hardest of all because they have nothing to do with money. They have everything to do with the habits you choose to live by every single day. The sixth sacrifice isn't about money, it's about certainty. Most people delay investing because they're waiting for the perfect moment. They tell themselves they'll start after the next election, after interest rates fall, after the market crashes, after the economy improves. The problem is that the perfect time has a habit of staying just out of reach. Meanwhile, months become years. History shows that markets spend far more time rising than falling, even though declines can be dramatic when they happen. That's one reason many long-term investors focus less on predicting the next move and more on investing consistently over time. That approach doesn't guarantee profits. Markets can and do fall. But waiting indefinitely has a cost too: the years your money could have spent growing. Successful investors eventually accept something uncomfortable. You will never have complete certainty. Every investment carries risk. The goal isn't to eliminate uncertainty, It's to make informed decisions and stay consistent. That's sacrifice number 6. Giving up the illusion that one more headline, one more YouTube video, or one more prediction will suddenly make investing risk-free. The seventh and final sacrifice ties everything together. It's giving up the need for immediate results. We live in a world that rewards speed. Groceries arrive the same day. Movies start in seconds. A package ordered tonight might be on your doorstep tomorrow morning. We naturally expect money to work the same way. Invest for 3 months, and we hope to see dramatic results. Build a business for 6 months, and we wonder why it hasn't changed our lives. Real wealth doesn't usually work like that. It's much closer to planting a tree. For a long time, it looks as though almost nothing is happening. The roots are growing where nobody can see them. Then, year after year, the tree becomes stronger, taller, and far more valuable than it appeared in the beginning. Money follows a similar pattern. The first $10,000 often feels painfully slow. The next $100,000 usually comes faster because your investments are helping you build the next milestone. That's the power of compounding. It rewards patience more than brilliance. When you look back at these 7 sacrifices, a pattern starts to emerge. None of them require a 6-figure salary, none depend on finding the next great stock, and none ask you to stop enjoying your life. Instead, they ask you to think a little further ahead than most people do, to value ownership over appearances, to invest raises instead of spending all of them, to use some of your free time to improve your future, to stay patient when others chase shortcuts, to admit mistakes instead of defending them, to invest without waiting for perfect certainty, and finally, to trust that consistent decisions, repeated for years, are often more powerful than dramatic decisions made once. Building wealth isn't about making one heroic sacrifice. It's about making small, intentional trade-offs that your future self will thank you for. Because in the end, the people who become financially successful rarely have fewer temptations than everyone else. They simply become better at deciding which temptations are worth giving up.